Inflation, is it truly the monster it's made out to be? This ever-present economic phenomenon is often viewed with a sense of trepidation. But why is that so, and what exactly is inflation? Inflation, in the simplest terms, is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Imagine this. You could buy a loaf of bread for $1 last year, but this year, that same loaf cost you $1.10. That's inflation at work. Inflation is primarily caused by an increase in the supply of money. When there's more money circulating in the economy but the same amount of goods and services available, prices tend to go up. This can be a result of government policy or sometimes external factors like a surge in international lending. But is inflation all doom and gloom? Well, it's not that simple. Economists are divided on this. Some argue that inflation is a necessary part of a growing economy. They believe that a moderate level of inflation can stimulate spending and investment, driving economic growth. On the other hand, there are those who view inflation as a destructive force that erodes the value of money and savings, creating uncertainty and potentially leading to economic instability. We'll be looking at both these perspectives in detail, and to do that, we'll examine the impact of inflation on different types of economies. We'll explore how inflation plays out in prosperous economies like those in Europe or the United States, and contrast that with its impact on struggling economies in Africa or Asia. We'll also delve into how inflation affects various aspects of the economy, like debt, investments, and pensions. And we'll look at real-world examples of countries that have been both positively and negatively affected by inflation. So, is inflation a necessary evil or a destructive force? Let's delve deeper. When it comes to well-off economies, inflation often plays a paradoxical role. In prosperous nations such as the United States and Europe, inflation can be both a friend and a foe. It's a delicate balancing act where just the right amount can stimulate economic growth, but too much can tip the scales towards instability. For instance, consider investments. Inflation can actually be good for investors. A moderate rise in price levels can lead to increased business revenues and profits, which in turn can drive up stock prices. This was evident in the late 20th century when inflation helped fuel a boom in the US stock market. Similarly, inflation can sometimes be beneficial for debtors. As strange as it may sound, when inflation is high, the real value of money falls. This means that the real value of debt also falls, making it easier for borrowers to repay their loans. This phenomenon was observed in the United Kingdom in the 70s when inflation helped erode the nation's public debt. But what about pensions? Here, the picture is a bit more complicated. In theory, inflation should be bad for pensioners as it erodes the purchasing power of their savings. However, many pension schemes in prosperous countries are inflation-indexed, meaning they rise with inflation. So, in countries like Germany, inflation can have a neutral or even slightly positive effect on pensions. In the grand scheme of things, prosperous nations often have the resources and mechanisms in place to manage the effects of inflation. For example, the United States has seen periods of high inflation, such as the 70s. Yet it has managed to navigate these turbulent waters and maintain long-term economic stability. As we can see, inflation isn't always the villain in prosperous economies. But what about struggling economies? The difference in the impact of inflation in varying economic situations is stark and worth delving into. The next scene will take us on a journey through the world of inflation in struggling economies. Inflation in struggling economies can often be a different story. While prosperous nations can sometimes harness inflation for growth and development, struggling economies in regions such as Africa and Asia often grapple with the negative impacts of inflation. In these nations, the economic landscape is significantly different, and rising prices can exacerbate existing challenges. Inflation in these economies can often lead to a spiral of debt. As prices rise, governments may resort to borrowing to finance their spending. This in turn can lead to increased debt levels, which become even harder to pay off as inflation continues to rise. Zimbabwe, for instance, has faced hyperinflation, leading to an economic crisis, characterized by high levels of national debt. Investments, too, are affected by inflation in struggling economies. High inflation rates can deter both domestic and foreign investors, as the value of their returns may be eroded by rising prices. In some cases, this can lead to capital flight, further worsening the economic situation. Take the case of Venezuela, where high inflation rates have led to a significant drop in foreign investment. Pensions, a crucial safety net for the elderly, are also not immune to the effects of inflation. In countries with high inflation, the purchasing power of pension payouts can be significantly eroded, leaving retirees struggling to afford basic necessities. In Nigeria, for example, inflation has had a crippling effect on the value of pensions, leaving many elderly citizens in a precarious situation. However, it's also important to remember that not all struggling economies are negatively affected by inflation in the same way. Certain economies may have structures or policies in place that can mitigate some of these impacts, or they may be able to leverage inflation in other ways to stimulate growth. So, while inflation can undoubtedly be a challenge for struggling economies, the specific impacts can vary widely depending on a range of factors, from economic structures to government policies. It's clear that inflation can be a burden for struggling economies, but where does the world stand today? The world today stands at a unique crossroads when it comes to inflation. Inflation, as it turns out, is not a one-size-fits-all phenomenon. Different regions around the globe are experiencing varying degrees and types of inflation, each with its own set of challenges and solutions. In the United States and Europe, for example, we're seeing a resurgence of inflation after a sustained period of low rates. Central banks are closely monitoring these developments, and some have begun to take action, raising interest rates in an attempt to curb inflation and stabilize their economies. Yet, the road ahead remains uncertain as they balance the need for economic growth with the risks of rising prices. On the other side of the spectrum, we find countries like Japan that have been grappling with low inflation or even deflation for years. Their struggle is a stark reminder that inflation isn't just about rising prices, but also about economic vitality. Meanwhile, in emerging economies such as those in Africa and Asia, inflation can be a double-edged sword. On one hand, moderate inflation can signal healthy economic growth. On the other, high inflation can erode purchasing power and exacerbate poverty. These nations are often caught in a delicate balancing act, trying to foster growth while keeping inflation in check. Now let's take a step back and look at the global landscape. The International Monetary Fund predicts that global inflation will remain elevated in the short to medium term, largely due to supply chain disruptions and rising energy prices. This presents a challenge for policymakers worldwide, who must navigate these turbulent waters with care. Looking ahead, we can expect to see a continued focus on inflation as a key economic indicator. Policymakers, investors, and everyday citizens alike will be closely watching inflation trends and their potential impacts on everything from debt and investments to pensions. Inflation, it seems, is a complex beast that varies in its impact across the globe. So, whether you're in London or Lagos, Tokyo or Toronto, stay tuned and keep an eye on this ever-evolving economic landscape. So, is inflation a friend or a foe? The answer, it appears, is not so black and white. Inflation, as you've gathered from our discussion, is a deeply complex and multifaceted beast. It shapes and is shaped by a myriad of factors, each with its unique impact on the economic landscape. In prosperous economies like those found in Europe or the United States, inflation can be a catalyst for growth. It encourages spending, stimulates production, and can even help manage national debt. Yet this same phenomenon, when unchecked or mishandled, can lead to economic instability, eroding the value of money and undermining the citizens' trust in their currency. Meanwhile, in struggling nations, often found in parts of Africa or Asia, inflation can be a formidable adversary. It can exacerbate poverty, widen income disparities, and in extreme cases, lead to hyperinflation, a state of economic chaos where the value of money plummets at an alarming rate. Yet, despite these challenges, there are instances where inflation can also offer a glimmer of hope, serving as a tool for economic adjustment and a catalyst for change. In the realm of personal finance, inflation plays a similar dual role. It can erode the value of savings, yet it can also increase the value of investments and real estate. It can make debts more manageable, yet it can also diminish the purchasing power of pensions. In examining the global inflation landscape, we see a tapestry of experiences, a mosaic of impacts. Countries like Zimbabwe have suffered the devastating consequences of hyperinflation, while others like Japan have grappled with the economic stagnation brought about by persistent deflation. Inflation, like most economic phenomena, is a double-edged sword. It can be a boon or a bane, depending on the context, and perhaps that's the most important takeaway from our discussion today.